Don't save money in a bank until you watch this. I know that sounds dramatic, but I need you to hear me out, because what I'm about to tell you, and it's based on my personal experience, might completely shift how you think about money, wealth, and financial safety. You don't have to agree. Just listen, then decide for yourself. Cool? I wasn't born into wealth. In fact, poverty and I were close friends for a long time. Late teens, early 20s, I was scraping, surviving, figuring it all out. But even back then, I had this gut feeling. Something isn't right about the way we're told to manage money. You know what we were told? Be responsible. Save your money. Put it in the bank. It's safe there. That lie has cost people millions. Let me take you back. There was a time, if you're anywhere close to my age, I'm pushing 50. You'll remember this. Banks used to take your money and do smart things with it. Real estate, business lending, long-term investments. And guess what? They actually paid us a decent interest rate in return. Now, it's like they woke up one day and said, forget growing our customers' money. Let's just bleed them with fees. Dormant account fee, ATM fee, maintenance fee, transfer fee, breathing too close to the branch fee. Okay, I made that last one up, but you get the point. I had an account for my son, real money in it. We didn't touch it. Thought we were being smart. Came back a while later, 0. Fees. 8. It. Alive. And when I reactivated the account, still 0. We had to put money back in just to use it. So I started asking myself, why are we giving our money to people who don't care about growing it and barely care about us? Let's talk interest. Most banks, they are offering less than 1% per year on savings. You might as well stash your cash under your mattress. At least it won't lose value there. Compare that to this. With minimal risk, I was earning 5% on my money, and with a higher risk appetite, 7 to 9%, even 10 to 12% on certain bonds and index funds. That's 10x what the banks offer. And if you're in the US, the S&P 500 alone has averaged 7 to 10% for decades. Now add inflation to the mix. If your money is earning 0.5% interest in the bank, and inflation is 5% per year, you're losing money. Quietly, steadily, consistently. Your savings are literally shrinking every single year. That's not saving. That's financial erosion, people say. But at least it's safe in the bank. Really? In Jamaica, for example, deposit insurance covers up to $1.2 million JMD. You've got $5 million in there. If something happens, a collapse, a crisis, you're only guaranteed to get back $1.2 million. The rest? Gone. Safe? Not exactly. And then there's the service. Let's just say, if you've had to call a bank lately, you know what I'm talking about. Unless you're wealthy, influential, or know someone inside. You get mediocre treatment and the worst interest rates. I've lived both sides of this. When I had nothing, I had no options. Now that I have more, suddenly, better rates, better treatment, even different rules. That's not a system. That's class-based capitalism. And the currency exchange? Don't get me started. My mother once sold USD to a bank and got $150 JMD per dollar. The same day, she had to buy it back for $170. That's a $20 spread per dollar. That's theft with a suit and a logo. Simple. We become the bank. Instead of giving our money to someone else to invest and profit from, we invest it ourselves. And you don't need a ton of cash to start. Look at platforms like Fundrise in the US. You can invest in real estate projects with as little as $500 or $1,000 and earn consistent returns. Ask ChatGPT for investment options based on your country and risk level. The list is long. We stopped using debit cards too. Why pay to access your own money? Instead, we use rewards credit cards and pay them off monthly. In 1 year, we earned $3,800 in rewards just from using the right card for business and personal spending. That's free money, real returns. We still use banks, but only as a temporary holding bay. Money comes in, sits for a short while, then gets put to work. Either it goes into an emergency fund, an investment, or a short-term goal. But it's not sitting around, doing nothing. It's either moving or earning. Here's the truth. Banks are no longer built to grow your wealth. They are built to grow theirs. So take back control. Invest in knowledge. Build your risk tolerance. And most of all, stop settling for crumbs when you can bake your own damn cake. I'm not a financial advisor, just someone who's learned the hard way and lived to tell the tale. So, what's your experience with banks? Drop it in the comments. I want to hear from you.